Greetings. Welcome to my weekend market recap 5th March 2022. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. All these are open to the public. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q systems that run as add-ons to the TradeStation and Metastock platforms. That was the last slide. Let's continue with the live system. First, a look at the global markets, starting with Australian index, all ordinaries. Earlier, when price came here, I mentioned that I would look for a shorting opportunity. That came on this day when we had a flow short setup. We would not short the index itself because it had a lower tail, at least not on that day. We could look to short next day or the day after that. Then price came down, covered more than the risk distance, and we could exit the trade near the lower end of the move. At the right edge, it is inside a triangle pattern. Friday's candle shape and color both are also indecisive. Weekly shape and color are also indecisive. All ordinaries does not have any trend now for swing trading purpose. Next, Japan's Topix index. Okay, let's open Metastock one more time. Change the symbol to Topix index. And I'm going to remove the relative performance because now we are studying the indices. We don't use relative performance for that. Topix index, it is also inside a triangle pattern. In the daily bound by trendline resistance and support. However, it is bearish in the weekly. So it is also inside a range, but it is more bearish than Australian market. For swing trading, there is no setup at present. China's CSI 300 index. In the previous webinars, I mentioned that this trend line was going to take time to break. We were not going to short. And the trend line is still holding. Therefore, my view is the same, though price is in a downtrend in daily. Because of the weekly trend line support, I am not going to short now. Downtrending, but no short opportunity. FTSE index, UK market. Here the uptrend is now broken. For several weeks I showed that though the global markets were moving sideways or coming down, FTSE was in an uptrend for a long time. First, this weekly trend line was holding up to previous week, in fact. And now both this trend line as well as the next weekly trend line are broken in 1 week by a very bearish shape candle and of course bearish color candle. The daily trend lines are also broken. Now there is another trend line support nearby in daily and also in weekly. And price has dropped sharply on Thursday, Friday. There is no shorting opportunity now. It is in a downtrend for swing trading purposes, but no low risk shorting opportunities there. When was the last trading opportunity? Looking back from the right hand side, we can look at the ribbon. The flow colors are given here, the possible shorting opportunities. One came on Thursday, but that closed right on top of the trend line support. So we would not short on Thursday. However, we could choose to short on Tuesday. This is Tuesday, when this is Thursday, Friday. Tuesday, we had a flow short setup. We could choose to short knowing that we would book profit at the trend line support with stop just above trend line resistance, and that trade exited with profit early on Friday, or you could close the trade on Thursday near market close as well. The trend line in daily and weekly both are broken. However, additional trend lines are there. Looks like in a downtrend for swing trading purpose, but no shorting opportunity. And lastly, India's Nifty 50 index. It is in a downtrend. Too close to the lower boundary, too late to short. If you look at the bearish flows, on this day there was a bearish flow, but that was already too close to the lower boundary. We wouldn't short there. The previous bearish flow was here on this day. That was the day to short. We would not short Nifty 50 because the candle shape was indecisive. However, we could short individual stocks that also must have given flow short setups on the same day, and those trades would exit with a profit in 3 days time. Both weekly daily are in a downtrend, but too late to short now. And what is the overall global market view? Overall global market index is also in a downtrend, has trend line resistance, no trend line support, lower high, lower low, in a clear downtrend. Price is too close to the lower boundary, so I will not short now. When was the last shorting opportunity? On Thursday. We had the bearish flow. If we shorted at that time, our stop would be just above Thursday's high. Profit target would be lower boundary, and the profit was hit in one trading day. Now, one thing I wanted to highlight, that when I am going through these charts, global markets, and then I'll go through USA markets, I am never talking about the geopolitical conflicts going on. The charts don't change whether there is a big crisis, small crisis. or no crisis that media is talking about, the charts don't change. At least they don't change as far as Q trade setups and techniques are concerned. The same technique that I could use before the Ukraine conflict, I could use I am also, not only could, I am using the same even today, even on Thursday, even on Friday, I could do that. And the success rate of those trades did not change. Because if the trade was too late, Q systems and techniques should tell me not to take the trade. And if it was not too late, then I could take the trade and book profit quickly, or I could get stopped out. Either way, target is 60% success rate with 1:1 reward risk ratio, and I observed that even during last 2 weeks, the success rate had been more than 60%. I see many people are now coming on medias and TVs and telling that we have a system, we have a technique that helps you trade in the current market. What is current market? When I look at the charts, looking at the chart, neither you nor I can tell that where is the crisis. There is no label. We know because we know what is going on in the world through news, but the charts don't say anything. We could take a short trade. Now market was already in a downtrend. There was nothing special to take a short trade in this global index on Thursday. Overall, global market is bearish, and you will see the same principles are working. Same trading principles are working in USA market as well. I'll go through some of the recent ideas I shared if I have time, but let's go through the the market analysis part, market recap first. Let's now look at the USA market ETFs, QQQ. In a downtrend, both in weekly and daily, on Friday we have bearish flow, but there is a lower tail, so I wouldn't short on Friday. When was the last bearish flow? Here, and then prior to that here. Now one thing I want to highlight, and you probably already are aware of that, we have two bearish flow candles which came in a downtrend in QQQ. So if we applied the checklist conditions, both of them would give probably flow short setups. I can see the weekly was magenta for these 3 weeks. So probably both of them gave flow short setups. Would you short on the second instance or first instance? The answer is the first one, because the first one did not hit the profit target or stop loss. When the second bearish flow came, we would continue to hold the initial trade taken on this day, and then it would exit somewhere here when the reward risk distance was covered or lower boundary was hit, either of that. Now, could you take the short on the second day? In this case, you could, because the price did not change much from close to close basis. The risk was still narrow. Only challenge would be that where would be stop? If entry was on this day at the closing price here, would I give stop here or here? And that is the challenge. So what this shows, that we are regular traders, we track the stock universe, our own stock universe, trading universe regularly using Q Finder. So when we have a setup, without second guessing, we take the trade. We don't see that, okay, now a second bearish flow day has come, now I am more confident to take the short. That is not the right approach. Could you do that? In this case, yes, you could do that, and you could still exit with a profit, but that is not the Q guideline. Q guideline is we have unambiguous checklists for the 4 trade setups for 4 market conditions. When the checklist conditions are made, risk is small relative to reward, take the trade without second guessing. So looking back, and when you do this exercise, if you are a new Q systems trader, when you look back to find out which are the days you are entering a trade, then you would mark this day as entering the trade. You would not mark this day as taking the trade again because the first trade was not closed yet. We would not like to take second trade in the same instrument at the same time. That would be increasing risk. So in any case, when price came here, we were already in a downtrend, whether there was a crisis or not. I applied the checklist. I could find a short setup. I could short it and book profit along the way. Now there is no short setup, but it is in a downtrend. In fact, let me close the dialog box. In fact, if you see, on this day we had a sharp recovery, and since then price has not really come down, not even halfway to this long bullish shape candle. Price has not even closed below this watermark support. So media, if we listen too much to media, then we will be very bearish on the market. But market was bearish up to this day. Then we had a strong reversal day. This was something I covered in the previous market recap and 3, 4, 5. This week price did not move much. Yes, it came down little bit, but not what one would expect looking at the media. That's why it's better to stay away from the media, or at least not let it influence our trading decisions. I will show later that I in fact bought stocks even on Friday, and I shared them publicly before knowing the result. If I was too bearish looking at the news, I would not be able to buy. Now I will come back to that stock, at least one that I shared publicly. SPY. Where is the bearishness in last 1 week? There is none. It's moving sideways. Weekly candle is indecisive with bullish indecision. I'll actually be happy to take long trades if I get appropriate trade setups now, because all the people are bearish because of the news. However, market did not move at all this week as far as SPY is concerned. Doji candle. Dia. Dia also has a doji candle, has bullish indecision for 2 weeks in a row. After this strong recovery day last week, price has not moved anywhere, moving sideways. Where is the imprint of the scare that media is projecting? None. In a downtrend overall, but for last 1 week moving sideways, no direction at all. And small cap IWM for this week has not moved at all. I will be very happy to see this trend line resistance broken and then take many long breakout trades with proper 360 degrees analysis. Now notice the bullish headwind. Look back and see that the bullish headwind caught the bottom perfectly, isn't it? After that, the Ukraine issue came up, but this bottom identified by the bullish headwind, before knowing what was going to happen afterwards, that bullish headwind proved useful once again. Market is certainly not bullish, but for this week there is no movement. We'll see where it goes next week. Now let's look at market internals. Market breadth total view, very powerful internal health study using a single chart. We had the strong recovery day on this candle, and notice what happened afterwards. And this candle chart is a custom index built from two composites for major indices that also moved sideways. That is in line with what we saw from the major market ETFs. What additional thing we see here? We see two accumulation counts of significant amount, 1413. So under the hood, though price is not moving, under the hood there is more accumulation than distribution in this sideways move. If it can now break out of the sideways range, I'll be happy to buy. If we look at the 3-month new high low, that is in the lower half but not at the extreme. I am covering the market breadth in the master classes, and I'll go into it more detail. I have mentioned it before. Every time the 3-month new high low hits the low extreme indicated by these two parallel lines at the bottom, some stocks will certainly bounce up. Works like a clockwork. Here, here, here. So whenever you see 3-month new high low hitting lower extreme, and we don't read any threshold, we don't have to set any parameter, just look at the lines to know whether it is at lower extreme, then look for buy candidates. We would have profitable swing long trades here, here, here if we followed them. Now it is not at the lower extreme. If it comes down to the lower extreme, then I will again be ready to buy some stocks. If we look at the percentage of stocks above 50-day moving average, that is in the lower half. This is the midway point, 50% level. Now, notice one thing. If we look at the yellow line, it is in fact making higher high and higher low so far. If it tilts up, it will again go up from the higher low. So though earlier it was downtrending for last couple of weeks, the yellow line, and I covered in the last master class, this yellow line above 50-day moving average percentage is a leading indicator. It's not a lagging indicator. There are very few leading indicators possible in technical analysis, and this is one of them. This is also telling me to get ready to buy. Which kind of stocks? If we look at growth versus value, magenta line, that's continuing to go down. So growth is underperforming. I will look to buy value stocks. I will not focus on growth stocks. Cyan line, small cap versus large cap, is coming down. So small cap is underperforming. I will prefer to buy non-small caps. Non-small caps can be large cap or mega cap or mid cap. How are mega caps doing? This is the mega cap custom index in a downtrend, has trendline resistance, no trendline support. Friday has a bearish flow. However, the candle shape is indecisive, even more indecisive than QQQ. So I wouldn't short on Friday, but it is looking weak. So earlier from market breadth total view, I decided my preference will be to buy non-small cap. And now I see mega caps are not looking strong enough. So then I may prefer to buy large cap or mid cap. That is how I hone in on a particular class of stocks. I showed in several recaps for several months actually that Nasdaq was underperforming. Let's see if that is true, and this is now drilling down into the market breadth comparing Nasdaq versus NYSE. I'll not read the entire chart, just let's look at the yellow line, percentage of stocks above 50 MA. For Nasdaq it is around 25%, for NYSE around 35%. We are seeing this 10 to 15% relative bullishness in NYSE for months and months. And notice here also for Nasdaq NYSE, the yellow line is having higher high, higher low. Same is true for NYSE. If it tilts up again, it will go up from a higher low. That will also lead me to buy some stocks. From the market ETFs and market internals custom indices, preference is to look for buy setups, but they may not be there yet. Market is moving sideways for last 5-6 days, and if I look for buy setups, they may be in mid cap, large cap, non-growth stocks. Now let's see what we can know about the market from other analysis. The sector, industry, breadth, also market internals in a way, but from a different angle using sector, industry, stock granularity. A very useful study looking at the breadth across 1 month to 1 day. 1 month period is actually bullish. You may say neutral or bullish. If you look at industry stock, those are neutral. Sector is bullish. Overall, we may say slightly bullish. 10-day period, we may say neutral. We may decide either way depending on whether we are looking at sector or industry stock. Let's say 10 days and 1 month, both are neutral. Then we see bearishness increasing from 5-day to 2 days to 1 day Friday. So we could short when this bearishness was creeping in. We wouldn't like to short today. We would like to short when this transition happened from neutral state to bearish state. Now it has already gone down for a number of days from this breadth perspective, and it may be a bit too late to short. What about the bucket analysis? Bucket analysis is showing something interesting. Firstly, it is flat. When we look at the bucket graph, that is distribution of S&P 1500 stocks across equidistant buckets, that is equidistant bands within the Bollinger upper band and lower band, we see it is not exactly flat. It is higher at the lowest band, higher at the highest band, and in the middle it is coming down. What does it mean? It meant that the stocks that were strong, some of them became stronger. The percentage of stocks above upper Bollinger band went up from 3.5% to 11.3%, whereas percentage of stocks below lower Bollinger band went up in 1 day from 0.6% to 11.3%. Incidentally, I noticed both the lowest and highest buckets have the same percentages by coincidence. Now, weak stocks got sold and some strong stocks got bought. So you could look to buy these strong stocks. Would you buy stocks that were already at or above upper boundary? I don't try that, at least not in trend following flow setup. But if those stocks were at upper boundary and then went up further, we could actually buy them when they were in between the two boundary lines. That is when they were in the value area. That will be a proper flow setup, and when they went to the upper boundary we would book profit. Others may be buying now as breakout trades, but we could book profit using the flow setup. Is it at an extreme? No, neither the uppermost bucket nor the lowermost bucket are at the 30-40% levels, so they are not at an extreme. It can go either way. But this week I see this not so common pattern like an M, where stocks at the uppermost bucket went up, stocks at the lowermost bucket went up, and in the middle they fell down. And we can see the falling down from this shaded bars with the bright bars, light colored bars with the bright bars. The light color bars are for 1 day ago, actually, sorry, that is light color bars are for D2 and bright color bars are for the current day D1. All these plots update in real time also, and you could see that the stocks near upper boundary were going up, stocks near lower boundary or lower Bollinger Band were going down. You could see that happening in real time. Overall, the bucket histogram graph is indecisive. Is it bullish or bearish? Little more bearish if we look at the percentage of stocks above mid Bollinger Band. Above mid Bollinger Band is 45%, so slightly bearish. That is in sync with what we saw from sector industry stock breadth. On Friday, 3 sectors were actually up, 8 were down. Which ones were up? Utilities, energy. Energy is of course because of the conflict in Ukraine. Real estate went up by a very small percentage. So utilities is one that went up, and I did share one utility stock few days ago. Again, that did not have any consideration of the geopolitical issues. I just carried out the 360 degrees analysis. I will look at the utility stock. Part of it got stopped out. I'll share that. But let's look at the sector graph. In last couple of webinars, I didn't do that. Sector rotation. Which ones are the strongest sectors now? Energy and utility, and see for how long now they are number 1 and 2. From 5 months till this Friday, for almost all the periods except this period. But you may say practically for all the periods between 1 day to 5 months, the strongest sectors are now energy and utilities. And energy is actually all the way back up to 12 months. So it is probably a bit too late to buy energy stocks. I will share one of the recent energy stocks I shared. I'll go through that again. In USA, also one in India, both hit the profit target easily. Utilities we could still look to buy. What we could avoid now, certainly avoid financials and consumer discretionary, the weakest ones. And you may look at the percentage change over 1 day, 2 day, 5 day, all the way up to 12 months from the performance table on the right. Usually I make trading decisions based on the scorecard. If required, I may look at the percentage performance also. So we will now look to buy in utilities. Energy may be a bit too late because it is strong for a long time. Avoid financials, consumer discretionary. Now, I always say sector tends to hide the strength of industry. So I don't do absolute top down that I just drill down from the strongest sectors to industries to stocks. Neither do I drill down from the weakest sectors to industries to stocks. I go to the industry scorecard and again look at the strongest industries without consideration of which sectors they belong to. And we have some good example here. Good that I did this. Which one is the second strongest industry? Railroads. It's neither utilities nor energy. So if I just focused on strongest sectors and drill down, I would miss railroads, which is very strong now, the second strongest. I would also miss food retail, that is the fourth strongest industry, that is consumer staples. So that's the proof again of why it is not the right choice to look at only strongest sectors and drill down or weakest sectors and drill down. We look at the sectors, I do that, but when making trading decisions to make sure that some industry strength is not hidden by sectors averaging, I look at the strongest industries and decide my trades. Railroads there were some interesting stocks in railroads. Not every trade I can share, or I don't share every trade that is possible. Food retail I didn't look at, but I tried to look at one of the railroad stocks I noticed last week, which gave a buy setup and probably hit the profit target also. So we have 43 industries that went up on Friday. So we could look for many buying opportunities, not in one or two industries, in 43 industries they were up. Again, a proof of what I said, that if we just focus on the news, we may be discouraged to buy some of these stocks in the strongest industries. Which ones are the weakest industries? Let's look at the weakest. They are in consumer, discretionary, industrials, materials, real estate also. And we can see several of them. Okay, let me redraw. Several of them are weak for a long time. The best shorting opportunities might have passed. Whereas motorcycle manufacturers was stronger earlier and now it changed to weakness from 10-day period onwards. So in recent days we could look to short motorcycle manufacturers. That is one way you could look at stocks, drill down from industry level to buy or short based on strength. And sometimes when things change rapidly, instead of using strength, you may use the acceleration column here. Pace columns are actually acceleration columns. This 1-day period will become real time during market hours. Let's see which ones accelerated most. Interesting, isn't it? If we just looked at strength, then consumer discretionary is not something we would consider, especially if we drill down from sector level. Consumer discretionary was not strong as a sector, but leisure facilities as an industry, not that it is one of the strongest industries on Friday, strongest ones will show up with checkered background. So it is not one of the strongest, but it is the second most accelerating. Same is true for insurance brokers. And you can see these two industries were weak earlier. Here. And now they are not the strongest in terms of strength, but accelerating very fast. And you will find several other industries that are not strong now, not yet, but coming forward from behind with high acceleration. So you could look to buy those. You will often catch stocks before others. Restaurants is one interesting one, looking like leisure facilities also. They were weak and now accelerating heavily. So you may drill down top-down analysis, but not start with sector level, start with industry level after keeping an eye on the sector scorecard, then drill down based on either strength or acceleration. Many industries went up on Friday, so we could look to buy on Friday also. Now, coming back, the Q edge overall is telling that it had been weak for a while. The best shorting time might have passed, and it may be okay to look for buy setups. Now let's see the technical breadth. The weekly period balance between bulls and bears using Q finder. All signals bearish, strength bearish, trend continuation bearish, reversal bearish, everything is bearish. That is for the weekly period. Not too much bearish, none of the categories are showing more than 80% bearishness, so it's not too much bearish but bearish. And Friday, okay, here we have severe bearishness in terms of all signal, strength signal, trend continuation signal. So they are approaching the oversold level. When it goes to 80-90%, then it's oversold level. On the other hand, reversals are mixed, slightly more bullish. We may say it's mixed neutral, but in absolute numbers, the reversals are very small relative to the gap down. So together in this case, though we have bearish strength, slightly bullish reversal, overall it is still remaining bearish because of this difference in absolute numbers. Now I mentioned that it is approaching 80-90% or at 80-90% level across three categories, that is approaching oversold level. We can see on Friday 35%, that's a very large percentage of my stock universe here, that's liquid mid price stocks. Gap down, that's huge percentage. We'll get some exhaustion up move if price can move up next week. Currently it is still looking weak across all dimensions, whether it is technical analysis, Q edge analysis, market internals. Everywhere we see more bearishness, but I think it's not easy to find low risk shorting opportunities right now, and sentiment is so bearish, whereas last 1 week price did not move. That may lead to a price move up. We'll buy only with proper Q trade setups. Now let's look at some of those setups, starting with a stock I shared in the India market. Doesn't matter which market it is, so long as we are applying the same technique, same Q guidelines. Let's go back. Let's find the forum post on saganandi.com. 360 degrees trading ideas. Here I shared the ideas always before knowing the result, and I shared one energy stock, COAL, in India a while ago. Is it this one? Yes. 15 days ago, I shared this coal India, coal.ns. See the analysis that I did. Firstly, I found it as a bullish reversal setup from Q Finder with a trend following flow setup. Bullish setup. The stock was up 2.7%. It was at price extreme middle. So Finder alerted me of this stock. Look at how I used the industry scorecard. It was one of the strongest industries and it was one of the most accelerating industries, which is shown by the checkered background. So the industry was telling loudly that buy if you find a good technical setup and fundamentally strong stock. And I found coal 10.7% dividend yield. That's very high dividend yield, and it's a very solid company. It's not a tech company that will suddenly go down. High dividend yield, valuation secondary is strong, valuation is medium, however has accelerating earnings growth, and it's a growth stock. Anything above 25% is considered high growth stocks for quarterly earnings growth. Acceleration is also shown from the graph here. Year on year quarterly earnings growth went up, year on year quarterly revenue growth also went up. And what also attracted me was the fund accumulation. That was the best possible score of 100, while dividend yield was very high. So if the stock failed, I decided to not exit the trade. I would have held the stock for its dividend. I do that sometimes, but I make the decision before entering the trade. In my India account, I cannot always freely trade options. Otherwise, I could more happily short it using puts. But one of my accounts where I trade mostly in India, I cannot use options. So I decided to buy the stock. Also looked at the technical chart. Finder already showed us that we had a flow setup. And remember when I was walking through the market technicals, whether USA market, global markets, I was pointing to the bearish flow. While the markets were showing bearish flow, this stock had a bullish flow. Trend following long setup, which also had trend line support. And it had a bullish reversal. Remember, Finder picked up this bullish reversal, the bullish flow both. And the weekly was coming out from a volatility squeeze, not the traditional squeeze, but Q's own squeeze calculation based on volatility, not based on price move, like in case of Keltner channel going inside Bollinger Band. That's the traditional squeeze. That also is useful. That is there in the alternate Q chart, not shown here. You may buy based on volatility squeeze release or traditional squeeze release. In this case, in the weekly, we had a volatility squeeze release. Those were additional confirmations. The checklist requirements were weekly color cyan, daily color cyan, price in an uptrend with higher high, higher low. That's it. And bullish shape candle in daily. So we had a flow long trade set up 15 days ago. And I took the trade. Let's see how it did. It was here, and initially the stock came down. As I mentioned, when the dividend was so high, I decided to hold the stock anyway if it came down for the dividend. So it came down, but I decided to hold, so I was holding, and then it sharply went up. When I had significant profit percentage, more than 10%, and I noticed that it was approaching the trendline resistance, I sold the stock, booked my profit. And I will not mind buying it again if it comes down to support and gives me another flow long setup. And you see how perfectly I timed the exit also, just at the trendline resistance. I actually exited partial position on this day, already had more than 10% profit there. I think so. Let's use the measuring tool. Yes, 10.46% in 7 days, 7 trading days. So I had more than 10% profit. I booked partial profit, and next day when it hit the trendline resistance, I closed my trade. Disciplined entry, disciplined holding on to the trade, looking at the dividend, and disciplined profitable exit. Nowhere in this analysis I thought about the conflict that is going on. The same was true during COVID also. I knew of the COVID crisis, but my trading decisions were not based on that. And if you can do that, I think your result will improve, not worsen. Now let's look at some other trade ideas I shared recently, and let's use Q Elite on TradeStation because I have those symbols listed here. FBP. Let's look at the post also to know exactly how it looked when I shared the trade. To me, that discipline is more important than the result. A trade may go down a long trade and stop me out. That's fine. So long as I am disciplined, overall I'll make money. And this was a stock that was stopped out. I shared it 3 days ago, FBP. Look at the analysis again. Regional banks, industry, high acceleration. The relative score jumped up from 7 to 133. The industry was up as well. And from the scorecard, you can see the relative strength and acceleration. Now see the similarity. In India, I showed one energy stock coal, and now I'm showing a banking stock in USA. Both had the similar pattern, exact pattern you may say, in terms of industry scorecard, strength and acceleration and up. Very different countries, very different industries, but the same analysis was applied. Again, a value stock with reducing earnings growth but still high earnings growth, and here also it had a decent dividend. In India we expect much higher dividend than in USA in dividend yield stock. So in USA FBP banking stock 3% dividend, not bad. Once again see the similarity between the stocks I picked. This stock also had fund accumulation. 98% of regional banks were up on that day at that time. And how did the chart look like? It also had trendline support. Remember, Coal India also had trendline support. Here we had support in weekly, daily both. Then price went up from trendline support with bull release after hitting low jump, after hitting bearish pressure, low jump, hit the trendline support, and very next day it went up. Volume was high on the down move, bearish pressure was there, so that met all the checklist requirements of a bounce long trade setup. So I did not think of whether a trade will make profit or loss before sharing the ideas. Of course I would not have any way to know, so I shared the idea. I bought the stock also, and I put my target at the trendline resistance, put my stop just below the trendline support. I had an attractive reward risk ratio, bounce setup, strong industry, strong fundamental. I took the trade, and this stock stopped me out. That's fine. So I am explaining the discipline with which you may apply the system and technique with confidence in any market. So this got stopped out on Friday. I'm out of the trade. Or on Friday? Yes, because this was the entry day. Next day slightly down, and on Friday it stopped me out. Now NRG. Let's look at this stock, utility stock. NRG here. Remember, utilities is one of the strongest sectors now. So I looked at that 2 days ago, and look at the analysis and similarity of analysis trade after trade. One of the strongest industries, electric utilities in this case, utilities sector, utilities is one of the strongest sector. Also one of the most accelerating industry. Great value stock, see again, reasonable dividend yield 3.7%, strong earnings quality. In this case, I could not find a stock with fund accumulation, but I bought the stock and I also shorted the put. I like the chart, of course. First, let's look at the chart. Okay, before that, before looking at the chart, I always look at the seasonality also. Just needs one more click to look at the seasonality. The other stocks I shared had nothing in favor of seasonality, but this stock had a high enough seasonality in April, and a jump from 67% to 72% bullish seasonality. Average when up for both April and March are about 9%, 9% plus. So that was also something I looked at. I don't trade based on seasonality only, but Q season program allows me to look at the seasonality. So I do look at it using another extra click. And then the chart. This was also having trend line support. Now remember, all the stocks I shared had trend line support. They work almost like magic, like the other Q trade setup signals also. But there is something special about the trades from trend line support. What is that? That is, many traders who follow can-slim technique or who follow mostly HSI technique also, they don't take these trades. People are still bearish. Both the HSI traders, use most of them, or and the can-slim traders, they look for stocks already in an uptrend. That's also robust. Both of them are very robust methodology. I appreciate both of them. I incorporate some of their learnings in my trading also, but they miss out on the lowest risk trades in this kind of fundamentally strong stocks, sometimes dividend paying stocks and fund accumulating stocks. So this also had trend line support, very low risk entry. What is so beautiful about buying at trend line support, and these supports are special, these memory trend lines are very robust. The risk is very narrow. So I saw that it was breaking out of one trend line resistance, and there were many other trend line resistances nearby. However, weekly support was also there. So I expected it to break the no, break this support, of course, at the close and go to the next trend line, by which time I could book at least partial profit. So that was my expectation. I took two positions, one with long stock. That is the one I entered first, and then I noticed I made a mistake because I should have simply shorted the put. So I entered another position with short put, and in this case the stock position got stopped out by intraday volatility. Did it? No, it didn't. NRG, right? NRG. Okay, so not energy. Okay. Energy, I followed up in the post. I am in a different time zone opposite to the USA market. So when I shared it, remember, this was looking like it was breaking out. But at the close, it pulled back. But I took a trade somewhere here using both the stock and short put. Then I fell asleep. And next day I saw it was not confirmed. That's fine. I was already in the trade. Now, if you were watching it, the confirmation was not there at the close, you wouldn't enter. And if you were awake, you wouldn't hold on to the trade probably. You would exit it using intraday charts on the entry day itself. But I am in a different time zone, so sometimes I fall asleep. So I fell asleep, and in this case, I am holding both the positions. If it goes below the trend line support, my stock position will stop out, but short put I'll continue to hold. This stock is still in trend, though the signal was not confirmed. That is something important to remember. Q guideline is not to buy a stock if the signal is not confirmed near the close. We don't wait for the next day, we can buy confidently at the close. In this case, I entered early, and because of my time zone difference only, I held on to the trade because I fell asleep before the close. That's fine. That's another trade I shared publicly before knowing the result. I'm still holding. Now let's look. Okay, let's look at all the trades actually I put here. General Electric. Let's look at the initial post. We are at 1 hour point. I'll go through few more, I think 2 more trades, including this one. I shared it 2 days ago. Now here I mentioned in the post that its industry was not weak. Well, relative score was not weak. Relative acceleration was strong, but if you see the actual percentage move in the industry, it was break even. So it was not going up, it was neutral. Of course, relative to other industries, it was strong because other industries were down a lot. And I noticed that, though it was a shorting idea I shared, relative industry score was not weak. But I still decided to short because I saw the valuation was very weak, earnings quality weak, funds not at all interested in buying. And though the industry was relatively weak, the stock was down by a big percentage, almost 2%. Not no dividend that is going to make me buy the stock. So fundamentals were very weak for GE. And I looked at the stock using many intervals because the industry was strong. I didn't just look at, okay, relatively strong, I should say. Relatively strong. Industry was neutral in absolute terms. But I looked at the stock using 4 weeks, 2 weeks, weekly, daily. Weekly, daily, of course, gave me a flow trend following short setup. In addition to that, I had trend line resistances in both daily, weekly. So I was more comfortable putting a stop just above the trend line resistance, and profit target would be the lower boundary. So I shared the idea, I took the trade. Let's see how it worked out. This was my entry. Next day it hit my profit target. I always have GTC order placed in the market to exit at least partial position. And in this case, I saw there were 3 bottoms, triple bottom. Yeah, now it is forming a quad bottom. So in this case, I exited the full position right at the bottom. Right at the bottom. I had my GTC order on partial position. In fact, this is how I managed it. I had GTC order on booking profit on partial position, and then I was awake. I looked at it using the intraday chart. It was not going down further. If it could break below this triple bottom, I would continue to hold partial position with trailing stop. I had good profit already. I would uh, be okay to hold on partial position, but I saw it stopped at the trend lines, not trend line, the watermark support, triple bottom, now quad bottom forming, and it was not falling down, so I exited the remaining position also. Very precise exit and very disciplined entry without worrying too much about the news or anything about the news. Let's look at one last stock that I shared yesterday as a buy candidate. Not many people were looking to buy, I guess. But I found drug retail industry relative score high. The industry was actually up on Friday, and I showed you that on Friday many industries were up. Drug retail was one of them. What kind of stock? Value stock, robust earnings quality, fund accumulation. The stock was up, dividend yield 4%. Notice the similarity between the stocks I selected. Value stocks, why? Because during market breadth analysis we saw growth stocks are underperforming, so my preference is value stocks. Information technology is not strong, so I avoided information technology. Nasdaq is underperforming. I focused on stocks that funds are buying. I also focused on stocks that had some dividend yield, so I could also use short puts. So in case of WBA, it had 4% dividend yield, very good fundamentals. And once again, I had weekly support from trend line, and I was looking for a breakout from the daily trend line resistance. Earlier it had the support in the daily from trend line. We also had a bullish headwind signal here. However, the trend line resistance was nearby. You might or might not have bought at that point. You could buy on this day actually. I didn't do that. At that time, jump thrust was at low point. Recovery was likely and it gave a possible bounce long setup this day or the next day. In any case, I didn't notice it at that time. I noticed it on Friday and I was expecting it to break out of the trendline resistance. I saw relative performance was strong. It was at price extreme low and reversing. We had the bullish headwind and we also had the bull release on this day. And then Friday I was expecting a breakout. I used short put to take the trade, take the bullish trade. I shorted using puts. Let's see how it closed. No, not that chart. Some of these templates I used to track the market during market hours, market ETFs, either for India or for USA or futures. Let's look at WBA. So it confirmed the breakout trade. Very nice breakout. I shorted in anticipation, shorted the put in anticipation. That's a bullish trade. And today when I woke up, I saw my short put is already more than 20% in profit. But it is looking very strong. I will like to book partial profit at 50% of max profit, which I think will be achieved by the time price comes to this level. I may book partial profit at that point and continue to hold the remaining position, trying to exit the remaining position at 80% of max profit. I usually don't try to squeeze the last few pennies or cents from the trade. I book full position profit at 80% of max profit for short put trades. So WBA was a long trade I shared and I took the long trade also on Friday. We are at slightly beyond 1 hour point. I went through these trades that I shared before knowing the result to show that it did not matter what was the news on the news channels. The techniques that we follow are robust enough, systems we follow are robust enough to apply in any market condition, and some trades will get stopped out. That's not only today in this current so-called current market situation. Some stocks will trades will stop out in any market condition, and as I am seeing during this period, also I saw during COVID periods, Q systems techniques, the success rate remains same for me. And you have to see how it is for you using Q diary probably. But I am able to trade confidently in any market condition, and you should be able to do that also in any market condition. Thanks a lot for joining. I look forward to seeing you in my next session. The public webinar will be next weekend, this market recap, and during the week I'll schedule the second part of Q market breadth masterclass. Have a great weekend, and as these examples show, I always say that there is no reason not to do that. Trade profitably. Thank you.